Well, good morning. Good morning to everybody. Happy Monday here in Arizona. We had a terrific weekend. Weather was blowing around 85, 87 degrees, not 100. The wind was blowing like crazy. So it was especially Saturday. Holy cow. Well, welcome. This is the channel where we look at the actual numbers that are going on in the local MLS and not the headlines, because I'm going to show you a few examples where the headlines are just not getting it right. And so you're going to see the real numbers and you're going to know, and you won't be caught by surprise if anything. We already have a question here about price per square foot, and I'm going to address that in a few minutes. But once you know these numbers and you know what's going on, you run into somebody that says, man, it's a crazy buyer's market. Buyers are coming out of the woodwork. You can go, actually, no, there's only an average of 4,200 every week. And they will be so impressed. As I say, you'll continue to be the hit at all the cocktail parties. So what's going on this week? A little bit of a change, not much. 5,111 homes on the market this morning. That's up about 200 versus last Monday. Keep going, keep going. We need this to happen. Over the week, the last 7 days, we had 4,221 homes come on the market and 4,099 go under contract. That's a difference of 122. So when I see articles that say that we've got all this buyer traffic, and we even had the CEO from Realty say consumer demand is sky high. Not really. Maybe in some areas the consumer demand is sky high. We're still only 4,000 every 7 days. We haven't seen it change. So that's not a very accurate statement. Now, he's a smart guy. He owns several real estate firms. It seems like there's a million buyers out there when we're all trying to get only the 5,000 homes that are listing, and it gets worse when you break it down by just different price points. But it's nuts out there, no doubt about it. But it's not because there's a buying frenzy, because there's just no choices. We do have 1,102 coming soon listings. Now, why would somebody put a coming soon? Well, coming soon for you, if you're a buyer and you're working with an agent, make sure that they're putting you on that coming soon listing. They're not all completely accurate. I was going through it this morning, and there's a lot of them that are already on the market, even though it said coming soon. But there are some, actually quite a few, that you can see that you're looking around Thursday and it says, well, this isn't even going to be available to see until Saturday, or this isn't available until next weekend. That's great because that gives you time to get ready to go see it. There's a lot of times a listing will come up and it comes up today and you have to go see it today and it just doesn't fit in your schedule. A coming soon listing gives you time to say, okay, let's see if we could free up some time to go see this on the day that it comes up. So it's kind of nice that way. There are some people that abuse it. You're only supposed to put coming soon up for just a few days. Some people leaving them up there too long. But the MLS is getting better at policing that. There's another headline that I want to read. And first, I want to show you where we're at with supply and demand right now. And this is the Cromford Demand Index. As you can see here by this number, see how the demand index is going down slightly? It's the yellow line is normal. This is a mathematical calculation that measures supply, demand, and homes under contract. And so it is a predictor of what's going to happen later. As long as our inventory is down here and not up at 100, we're going to continue to see these price escalations. As you can see here, the demand index, the only time it's really gone way down below 100 is down here before the crash. That's right when the crash happened. Everybody said, I'm not buying any homes. But notice that when everybody was out buying homes and everything was going crazy and everybody said, you got to buy a home now or you'll never be able to afford one, everybody's flipping them. Inventory and the supply index was at 211. That was our supply. And you had a 1-year supply of homes out there. So, this didn't work. This is a huge disconnect, folks, telling you things are going to go bad. So we need this number to start coming up, and it's coming up oh so slightly right here, just barely moving, correct? So it's pretty rough. When you look there's articles out here. This one's called the Housing Bubble Blog. He's been predicting a bubble for a few years now. But he does bring up a good point here. And I've noticed this too. There's a weekend topic starting with ABC in Arizona. The news is really starting to put a lot of stories out about the real estate market here in Arizona. Radio station FM 92.3 KTAR did a daily update all week talking about the real estate market. Sometimes that indicates a peak. Sometimes when you see more print, more articles, more study, more analysis, that means everybody's very well aware of what's going on. That's usually a peak. When everybody's talking about the price of gold and the price of gold looks like it's going to continue to go and go and go, chances are price of gold comes down. It happened with Bitcoin last week, remember? Everybody was talking about how Bitcoin was just the way to go. It was going to hit $100,000. It's going to do this. Ethereum's going to hit, God knows what number, 50,000. And they all crashed. I mean, they crashed hard, down over 50% just over the past 3-4 days. So it's impossible to predict some things. It's impossible to predict a long-term outlook for housing. So let me take another peek here at a number that I like to follow. Oh, Carlos says, what camera are you using? You look clearer than the news. Glad you noticed. I did a complete revamp. Of my office, and I changed my camera settings somewhat, and I have a 3-point light system, and I think I finally nailed it. So appreciate you noticing that. I worked so hard on it. Seriously, though, I'm going to be starting another YouTube page for real estate agents and online business owners that want to learn how to do video on YouTube or Facebook and how to do it on a budget, how to kick it up a notch. So it's going to be about a month before you see that launch. I'm not charging anything. I'm just going to have a series that shows you how to do all this stuff, and it'll be free. So looking forward to that. Cromford Index. This is not so much the index. This is closed sales price over list chart. This went up about 2% last week. We were sitting at about 57% of homes were going above the list price. Now it's 59.2. But boy, when you look at the price points, the one that's really getting hammered now is between 400 and 500,000. You look at this, the average, this is average, is going $20,000 over the asking price. Now, the asking price is pretty arbitrary right now. I mean, you're just putting it out there and you see what happens. There's crazy arguments out there. There's one here that I just can't believe this. This is emotional buyers or further. Let's see. Yeah, I like this. This got some interesting news. You're not going to believe this. From Austin, Texas. And no, Todd, it's not your house. Nobel Prize winning economist Robert Shiller is worried a bubble is forming in some of the market's hottest trades. Now, if you haven't heard of Robert Shiller, I followed him a lot in 2006. But lately, the Case-Shiller people have been way off. They're the ones that predicted a 6% decline. We didn't happen, but sharp guy. He's notably concerned about housing, stocks, and cryptocurrencies. Yep, good old coins, where he sees a Wild West mentality among investors. According to Shiller, current home price action is also reminiscent of 2003, 2 years before the slide began. If you go out 3 or 5 years, I can imagine they'd be substantially lower than they are now. Maybe that's a good thing, he added. Not from the standpoint of a homeowner. But wait till you read this. There was, let's see, it's down in, I'll just tell you about it. I can't seem to find it right there. In Austin, Texas, this home was for sale for $425,000. The buyer came in and said, not only will I buy that house, but I'll buy your next house. So he got financed for $700,000, or he came in cash. I don't know how he did it. He gave him $700,000 for the house, enough for them to go buy another house. That is lunacy. We start seeing stuff like that, then you know you're at the top of the market. So where we're going to adjust all depends on how fast the inventory comes up. But if you're a seller right now and you're thinking about selling, there could not be more clear signs that says, put it on the market now. Even if you're 6 months early, now's a good time. There's no doubt that it's a good time. So put your house on the market and get it done. I think, we had a show on Saturday here where we talked about the different options that you see when it comes to selling a house. Now, let me answer the price per square foot one, and you're probably not going to like my answer because it's going to be very ambivalent. The question says, what's a good price per square foot to purchase a house in the Litchfield Park, Goodyear area? Is 150 square feet too high of a price? I'm worried that if I go much above that price, it's too risky. I don't know. It depends on the house. Depends if it's a 1-story or a 2-story. Depends on the neighborhood. Depends on the style. Depends on the age. Don't base it just on price per square foot. Right now, the only thing you can look at is comps. What sold last month or what sold last week? And is this one in line with that number? So if it's a 1,700 square foot home and it went for, let's see, 300,000, you're about 200 per square foot. But the ones next door or down the street, similar to that, went for 325,000, then that's a good price. But what you have to watch out for is if it's a good price at 300,000, somebody's going to come in and bid 350 for it. So a lot of that analysis is out the door. When you say that you think it might be too risky, are you planning on selling soon? So if you overpay by, let's say, 10% right now, we're going up at 4% per month. So you're pretty much broke even in 2 months with what your overpayment was. And too risky, are you planning on moving anytime soon? So if you're out planning on staying there 10 years, what is your risk? What is your personal risk? You're going to have a fixed payment. So you've got low interest rates right now, and it looks like they're going to stay this way for a while. It doesn't look like anything's going, to start picking things up. Esther and Jimmy say not planning on selling soon. So when you say, so you want to purchase, but you're not planning on selling it anytime soon, good. If you're planning on staying put more than 5 years, the math is telling you should be in good shape. So let's say today you go out and you pay $150 per square foot, and I'd have to do a deep dive on Litchfield to see what neighborhood it is and everything. You can send me an example. I'll be happy to take a look at it. But we're going up right now about 10% every 2.5 months. That's not sustainable. But if 6 months from now you're up 20%, we have a 10% dip, big deal. You should be in good shape. And Carlos says, I saw this morning that the average homeowner now stays in their home for 10 years. That's the whole problem. Us baby boomers are supposed to be moving, and we're not. The average homeowner is staying put. But there's a lot of movement to rural areas like Boise, Idaho. It's just getting hammered. All these small towns where people are saying, I can work from home now. I think I'm going to continue to do that. I'm going to go get something else. But even the shortage is everywhere. Every city has a story as to why there's a shortage. Every city has a story as to how fast their houses are selling. But it's just a story of lack of inventory. The headlines come out and say here's a good one. Mega landlord, this is in Bloomberg, big article. Mega landlord snapping up Zillow homes before the public can see them. Now that sounds vastly unfair, right? These mega landlords, these big institutions like I can't remember the name of it. They're coming in and buying the Zillow homes before you get a chance to see them. How big is this problem? You'll remember earlier last week I was talking and saying, you really have to look at the numbers. After you've seen the headlines, you have to look at the numbers. Here's the numbers. This will shock you. Now, keep in mind, this headline is meant to alarm you that the reason that you can't find a house to buy is because these huge institutions are buying all the homes that Zillow bought. Well, they bought 200 nationally in a 3-month period in the first quarter of this year. You know how many they bought in Phoenix? I'm holding the number up right there. 3. I don't think that's throwing the market off. And Zillow has only purchased 44 homes, I think it was, last month. So that number means nothing. And I don't know why they would even write an article like that. But even interest rates, when the bond market had a small little hiccup just the other day, the headlines started flying out saying rates are on the rise, rates are on the rise. Well, they were for about 6 hours. Then they came down. So everybody's quick to get on the keyboard and tell you that something's changing. That's why it's a good idea just to look at these numbers over the course of the week and see if anything really is changing. A lot of the talk about bubbles, crashes, and all that stuff, some of these guys might be right, but if you're not seeing the movement in the numbers, then their argument might not be right. Yet they're just predicting and projecting. I know that when we first had the shutdowns that came along, I was convinced that things were going to end terribly just because of unemployment. But nobody foresaw the amount of support that we would get from the federal government and just how much support that would be. And but now we're worried that with all of this spending that's coming out, that maybe this inflation isn't going to be temporary. And how does inflation affect housing? Well, it doesn't really affect the price of housing as far as inflation is, but if it causes interest rates to go up to try and tame inflation, like Paul Volcker, the central bank, had to do during the Jimmy Carter years, then yeah, that's going to affect housing. But not if you're sitting in your home with a 30-year fixed rate at 3% and you're staying put. Who cares? Holding an asset's a good thing. When should I list when I don't want to close until after August 14th? That's when our 2 years are up. Michael asked that. Well, Michael, there's a couple things you can do. You can, and this is popular right now. People are doing it a lot. People are listing their homes, then they're asking for a 30 to 60-day lease back option. In other words, somebody buys my house, I rent it back from them for a couple months. Buyers are more willing to do that now than they were before. So you have that option. You can always count on like a 30 to 45 day close. So right now you're talking about August. You don't want to close until after August 14th. Put it on the market last week of June. And then you can say buyer doesn't want to close until August 14th. So whatever offers come in, you can just say, be sure and write a closing date of August 14th or later. Or you can go ahead and list the 1st of June and say the seller would like the option of a 30-day lease back to get ready to go to their new home. So lots of options there. So, you could list it now in May and then ask for a 60-day lease back. So let's see, May, June, July. That's probably a little too soon. I don't think anybody's going to lease it back to you that far. Now, the numbers are looking like the summer's still going to be strong. So I don't think you're going to see any kind of dip in July and August as far as price appreciation. So, but I'd say going 45 to 60 days out is safe because you're getting a contract in 1 or 2 days. But just make sure that you let them know when you want to move and the buyers will be flexible. I hope that helps you, and thanks for asking the question. So we're going to look at a bunch of different numbers this week. I'm going to drill down to a few different neighborhoods and everything, and like what we do every morning. It's interesting. Our inventory always comes down to its lowest level on Monday or Tuesday. Today is when people start recording what sold over the weekend. So that 5,111 is going to be smaller by the time the afternoon gets here, and we'll look tomorrow and we'll see if it dips down below 5,000 like it has every week after week after week. Until then, everybody take on the day. Have a fun beginning to the week. Thanks for watching. Don't forget to subscribe and hit that like button.